posted the highest ever revenues this quarter. Could you tell us how much of it came from the auto segment and what was the contribution of non-auto, that's farm equipment?
If you will allow me, because it's been a very good quarter, so I just will hit the 2 or 3 highlights and then we'll come to answer your question. The first is that it has been the highest ever Q1 on all financial parameters including revenue. On revenue and EBITDA, it is the highest ever figure irrespective of quarter. So take any quarter in history, this has been the highest figure. So there are 2 big milestones. In farm equipment, we have 2 big milestones this quarter. One is our revenue actually touched 5,000 crores for the first time, and the segment profits PBIT touched 1,000 crores. So it's a 5,000 combination this quarter, and exports in auto doubled. So this being some of the highlights that I am talking about. Now answering your question, both auto and tractor contributed handsomely. Just to give, both of them had a revenue growth of about 22%. Okay, so maybe tractor is roughly higher at 23%, but revenue growth in both cases at about 22-23%. The profit growth or PBIT growth in case of auto was about 3x. So it's about 69% growth, and in case of auto, the profit in case of farm equipment, the profit growth was about 47%, so 2x. So that's the rough both auto and tractor handsomely contributed, and as I told you that tractor is about 1,000 crores PBIT. The equivalent figure in auto was about 800 crores, not exact, but around 800 crores, 785 or something like that.
Margins in the agri segment have been high double digit over the last 4 to 5 quarters now. Do you believe that a 20% plus level is sustainable? What kind of growth are you penciling in?
So first and foremost is the growth in terms of 2 questions. What is the kind of growth, and second is what kind of margins, whether it is sustainable. The first is on growth. I think seeing where we are for the rest of the year, I think the growth can be up to about 12 to 15% on a full year basis for tractors because of the high positive movement that we have had already. Then comes the question of margin. Yes, it's been a 20% kind of margin. That's had two reasons why it has happened. Number one is the top line growth, which gives leverage on the cost elements. The second one is because we have had cost management programs which are coming to fruition. So it's a question of internal cost management, which anyway, like we talked about, that we have a program which will give us 200 basis points over 2 years or 3 years. So you are seeing that actually coming into play in this quarter, and as it will in the future quarters also. And as long as there is a revenue growth, the margins which are there are, from a point of mathematical calculation, clearly maintainable. But at the same time, we never make any comments on future nor give guidance, but with that caveat, rest of the calculation any good analyst will be able to make, and we are very confident of where we are.
No, that indeed is the case. Mr. Parthasarathy, your guidance for tractors and farm equipment is unchanged, while your rival, just to put it like that, Escorts has revised its guidance upwards. What's the reason? I mean, are you being conservative here?
So I just said that I think the tractor demand, earlier we had said it will be in the early teens, so we are also saying it should go to 12 to 14. I don't know what exactly Escorts said, but I think it will be on the higher side, or it will be on the mid teens. How much, whether it's 14 or 16 is a matter of conjecture. That is what I said. We have upped the tractor full year forecast or full year outlook for the industry to 12 to 15 now.
Right. How much has been the overall growth from rural markets versus urban markets in Q1, and how do you see the momentum play out here?
The tractor obviously is a clear direct correlation to the rural market, and we have seen very sustained demands, and has been, so that shows that the rural demand is very clear. When it comes to auto, we have seen very strong demand from the rural market and also demand from the urban market. So I would say in auto it's been widespread, and the tractor shows that not just in auto but also in the farm equipment space the rural demand is very strong.
Agriculture share in India's GDP has been declining over the last couple of years, and given that Mahindra and Mahindra is largely a farm equipment company, how do you think your profits from the agri space will remain relevant?
So very clearly two things are important here. One is to understand that food will always be important, and within that productivity will always be important. So when Prime Minister Modi talks about doubling the farmer income, in a sense he is talking about increasing productivity, and at an arable land size which is even higher than China, our tractor demand is far lower than China, but if you look at implements at attachment, it is at a very, very low figure. So in a sense there is a huge positive movement on overall agri output, agri productivity, and therefore the contribution of agriculture to the overall GDP can increase significantly by using productivity tools. If other areas in the GDP calculation also grows as fast or higher, maybe the proportion will remain same, but growth in the overall agri side can also be very fast, and I think there is huge amount of potential for M&M to contribute here. So we think the tractors will continue to have huge headroom in the medium to long term. Second is implements and attachments, which worldwide has a propensity to be about 30 to 40% of the overall revenue. In India is very, very low, and therefore there is a huge potential, upward potential for revenue and profit in that area, and I think we are in the right place. India is the biggest growing market, so we do not see any reduction in potential. If anything, we see a much brighter upside in coming years. So for a rural company like M&M, this is great news.